Hi, this is Mike Maloney, and I've got Jeff Clark once again. Jeff, how are you doing?
I'm doing great, Mike. It's sure great to be back with you after our little hiatus there. So it's fun to be doing another video with you. And this one's jam-packed. We got article of the day, tweet of the day, chart of the day, some viewer feedback, and a great meme. So you'll want to stick around for that. So let's just jump right in. The first article of the day we want to go over is actually one I wrote that came out yesterday, titled Two Charts, One Message. Get ready to load up on silver. And the reason I wrote this was because, boy, every week, Mike, you'd hear about the S&P and the Dow and the NASDAQ making another new all-time high. And this went on for a
Right.
year after, the sell-off earlier last year. And finally, they had a correction. So I wanted to see how far silver was from its high versus the Dow and the NASDAQ and the S&P. And this first chart shows that, just how far away silver is still from its all-time high versus the correction that we saw in the general markets. And you can see silver, even much more than gold, despite it being up more than gold this year, is actually a much better value than any other asset right now. And then the second thing I wanted to look at was the seasonality, because there's a very interesting statistical movement in silver for the month of June, and this shows it. And this chart goes all the way back to 1975. It's the average daily gain or loss in silver averaged over that whole period of time. And you can see that June has a pretty significant dip on average. Now, seasonality doesn't play out every year, but it's very interesting, and it makes us want to be ready for a potential dip in the silver price. Meaning, Mike, is this potentially this June the last chance to load up on some silver? What do you think?
Well, I don't know if it's the last chance, but I do know that gold and silver are money. And the very fact that silver is still almost 44% below its all-time high, and that all-time high was set in 1980. And the currency supply has been expanded so many times since then. And you can see here that gold has kept up a little bit better when it comes to that long-term look at things. But this is a great article. You've got two criteria here relative to all the other assets. Is silver the most undervalued? And then the criteria two, the timing. When is the best time to buy? And you can see that the best time to buy is coming up. Now, you just said the seasonality doesn't always play out, and it may not this time. So, for me, I already have a position. I recently sold a bunch of cryptos when they were setting highs about a month ago. And I've got that sitting in cash right now, ready to deploy. And I've been sort of looking forward to this dip that's coming, hoping that I can buy more silver at lower prices. But, you never know. And a lot of the technical indicators, there's a lot of chartists that say that, gold and silver have just broken out of trend. Gold had just broken out of a trend channel. It came back and retested the top of that channel and held. Over the next few days here, will that be consistent? And if so, then we might be off to the races. So I guess if I was somebody that had not accumulated anything, I would go ahead and start dollar cost averaging in is what I would do. I don't recommend anything to anybody in particular. Everybody has to do their own research and decide what they want to do. But I would be dollar cost averaging into one of the least the most undervalued assets that there is anywhere on the planet. Because real money can never stay below the rest of the currency supply. It can't be measured in currency, and then you expand the currency supply and real money doesn't keep up. Periodically throughout history, they always catch up and surpass it and then take a rest for a while. So yes, brilliant article. I love it.
And the point of this is that we're guaranteeing there's going to be a dip in the silver price in June. And by the way, gold does have that tendency as well. Just silver being more volatile does dip more. The point is to be on the lookout for a potential dip and don't be surprised by one. And most importantly, be prepared to take advantage of it if it does come. So,
yeah, right. There is no guarantee that there will be a dip. But if it happens, have a little bit of cash set aside to take advantage of it. And that's what dollar cost averaging does for you. If you're dollar cost averaging and making like a purchase every week or something like that of the same amount of dollars, when a dip does come, you've still got a bunch of cash sitting on the side, and you can say, well, this time I'm going to double down or quadruple down, or I'm just going to go all in. I have done that a few times. When the 2008 crash happened, the global financial crisis, I was able to basically double my position in silver during that period of time. And when you can do that, I mean, you've got so many more ounces then for this big ride that we're taking. It's a long-term ride, but a lot of people say that 90% of the move comes in the last 10% of the time. And we are getting closer and closer and closer to some really big financial crisis caused by just incredibly reckless spending that cannot be sustained.
Yeah, absolutely. The big picture's more intact now than ever before. So, well, Mike, on to tweet of the day. And this is from Bloomberg Crypto. Billionaire hedge fund manager Ray Dalio, who I really like, and I've read some of his books, says he would rather own Bitcoin than a bond. What do you think of that, Mike?
Well, I've always thought that bonds, there is something fundamentally against my nature to be buying a cash flow stream from future taxation. And that's what a bond is. If it's a U.S. Treasury, that's what you're buying, is you're buying cash flow from taxes that everybody, including you, are going to have to pay in the future. And that to me is almost like a form of slavery to have a population that has to turn over a portion of their income so that you can pay off investors that have invested in the speculation that they're going to get paid back. But as bonds become less and less of a safe haven asset, and I think this time around, when there is a great financial crisis, they've already had to sell so many bonds to do all of this deficit spending. And when this crisis hits, then for the Keynesians that run the financial system, their viewpoint is that the only way to get out of it is to do more spending. They're trying to spend their way to prosperity, and you can't do that. Prosperity takes some savings and investment, not just spending. Anyway, so I think that this is great that Ray Dalio has jumped on board saying that he prefers, and Bitcoin has taken a beating in the past couple of weeks, and this is fairly recent. So this is a pretty big announcement from a very respected financial advisor.
Yes, it is. And Mike, I should point out, you just mentioned that you actually sold some of your cryptos, and you released an insider's video here, not just a week or two ago, announcing that and all the things that you were going to be buying, so insiders can get that information. But I think it's interesting that you sold right around $60,000 per Bitcoin, which ended up being near the top of this market, whether it's an interim top or the top. So.
Yeah, I did. It was very nice. There was a point where I felt like I had enough profits, and it's nice to lock in those profits. And the timing, I was just watching some of the chat and the news about it and everybody writing about it. And when you want to sell is when everybody else is jumping on board. So
yeah.
Yeah,
you snagged some very nice profits there. So
yeah.
Well, if you're liking this video, please hit that like button down there for us and subscribe to the channel if you already haven't. So, well, on to chart of the day, and this is quite fascinating. Mike is going to walk us through this, and you tweeted this out from Michaela A. I always say that if a picture paints 1,000 words, then a chart paints 1,000,000 numbers. So, Mike, walk us through this. This shows us
Yeah.
how the world is actually becoming a better place in some ways.
Yeah, you know, the old saying is one picture is worth 1,000 words. And I've always said, well, that means that one chart can be worth 1,000,000 numbers. This is a whole bunch of great charts that cover long, long periods of time. And so the data in here is huge, and I'm like a data hound. But let me see if I can share my screen here. So I want everybody to notice that this starts in the year 1900. So this is 120 years of data here. And what we have is the percentage of mortality of 0 to 5-year-olds. What is absolutely amazing is that you can see an average here is pretty much like just above 35%. 35% of all 0 to 5-year-olds in the world dying before they were, of all children in the world dying before they were, by the time they were 5 years old. And then on the bottom scale is the GDP per capita. It's adjusted for purchasing power parity. And what you'll see here is pretty simple. The more affluent a society gets, the lower the death rate. It's quite amazing. And it's like this chart after chart after chart. The more that you can create prosperity, the happier people are, the longer they live, the easier their lives are. Now, this one is life expectancy, and this is GDP per capita adjusted for purchasing power parity. And so what you'll see here is that all of these little dots, instead of going down, they're going to go up and to this side as all of these societies become more and more prosperous. But at 7, I'd like people to go and click the link below this video and go and watch this because it is so important. It just shows how government trying to run society is actually lethal. They damage, like right now in Venezuela, they've been going through hyperinflation for a long time, but their life expectancy has fallen by so much. The same thing happened in Russia, in the USSR. But watch, this is China, the big red ball here. And it's going to start rising, and then it'll take this big dip where life expectancy, and then it goes this way, purchasing power, the GDP per capita are going to this huge dip. That's from 1958 to 1962. That is something called Mao's Great Leap Forward. It's the greatest man-made famine in history. And what he did was he nationalized all of the farms. They were all going to feed everybody for free. And it was going to create this utopian society. So this is one man's great idea on how they were going to accelerate their economy and leap past Great Britain and the United States. And so it's one of the greatest tragedies in history, as well as the largest man-made famine. But watch China, the big red ball here, and it goes up here and then takes that big dip. Watch that a few times, and then look at how everybody is getting richer and their lifespans become longer. And now we've got GDP per capita, and each size of the dots is the population. So the biggest one is China, the second biggest one is India. But you watch this throughout the years, and they just rise, and then they start making this perfect arc where they're lined up. I think this is amazing data. This is women's education measured in how many years they stay in school against the population size. And they make this perfect arc. And then the same thing with water, having access to clean water and the basic sanitation. Do they have indoor plumbing or open trench? So now we're back at child mortality. But the point here is that everywhere you look around the world, the more a country, the more free it is, economically free, the longer people live and the happier that they are. And just everything is better when you have maximum amount of freedom. So that's the point of this whole set of charts. Very important. Please go and watch this a couple of times, everybody. It's great.
It is great. Yeah, it's worth watching, and it's real short, but it shows you just how freedom and prosperity helps mankind. So, well, Mike, on to some viewer feedback here. And Mike, I did get this question more than once from some people that wrote in through customer service and that sort of thing. And this is referencing your video from last week and about who really owns America's gold. And several people wrote in, like this person had said, I still don't know who owns the gold. So, Mike, who owns the gold?
Well, I should have put these two facts much closer together in the video so that people could see that the Treasury gave title to almost all of America's gold, all but the display coins. They don't actually have certificates of title to those ounces, but it's a very, very small percentage. But the Federal Reserve has those claim checks on the gold, and this is a contract with the United States of America. And then every place says that the Treasury may redeem the certificates at any time. Now, the Federal Reserve has the certificates. The Treasury has the gold, and the way that the Treasury would redeem them is to give all of America's gold to the Federal Reserve, the rightful owners. The answer is the Federal Reserve owns the gold. There are a couple of ways that America could get its gold back, but this is one of the greatest crimes in history, and it was pulled off so well that people are just, this has bothered me since I first read it back in 2003 in the Financial Statement of the United States. And so I finally did some research on it. But to be able to, for a corporation that is not part of the government, they're chartered and authorized by Congress, but it's a private bank, and they absconded with all of America's gold. It truly is the greatest crime in history, one of the greatest crimes. Ever since 2008, we've been pulling off a bigger one with the expansion of the currency supply out of nothing. If you look at Federal Reserve assets as a percentage of the GDP of the country, they own more and more and more of the country, and it's at an astounding rate now. But the gold belongs to the Federal Reserve, not the U.S., which is supposed to be holding it in trust for the American people. It's the only ways that they could do this. One, they give the gold to the Federal Reserve and they've redeemed those notes. Now they can destroy the notes if they want. Two, they could abolish the Federal Reserve and seize the assets, but that is breaking a contract, and that would break down confidence in the world confidence in the U.S. financial system. Three, they could print U.S. notes, a bunch of Treasury notes, the old U.S. notes that were printed originally during the Civil War, and they aren't backed by anything. It's just a fiat currency, but they don't keep on expanding that supply. They could print those notes and just give those to the Federal Reserve and buy back the title to the gold. So there are ways out of this, but the U.S. notes are the only currency that the Treasury creates. Four, I guess the Treasury could go even deeper into debt and buy the bonds to buy or sell the bonds and borrow the currency from the public and everybody else to buy the gold back, and they'd be buying it back at 42.2222 cents per $42.222 per ounce, and then they could revalue it. They could just let it go to the free market value, and they'd be making a huge profit on what they borrowed. So those are a couple of ways that we could get it back. But right now, Federal Reserve, that's who owns the gold.
Yes. And Mike talks a little bit about this. He touches on it in his book. So if you've not read his book, you can do so for free. The link is below, and you can read it for free. So, well, Mike, on to our meme of the day here. So this is very interesting. So tell us about this.
This is hilarious because, there are all these cryptocurrencies that are basically scams. There's just nothing there, and their market caps are huge. But this guy says these scam coins are getting crazy. I think he meant someone just shilled me. 27 trillion in circulation, unlimited supply cap, only one node, which is the node that keeps the track of the bookkeeping. 25% of the supply was minted in just the last 6 months. 1% of holders own 30% of the coins. These are all things that you wouldn't want if you're going to invest in a cryptocurrency. And he says, that is the US dollar.
Right.
It's not a cryptocurrency. It's the dollar. It's basically a scam coin. And people like Ray Dalio are running from it at this point.
Yes, very good. Well, this has been a great video, Mike. It was great being back with you. So thanks. And I'll see you Thursday.
Okay. Thanks, Jeff.